Hi everyone, let's run through my preferred bullish and bearish scenarios on the macro and the high time frame, including potential trading setup. Starting with the macro bullish Elliott Wave scenario on Bitcoin, where I'm looking for this to be a wave 1, 2, 3, 4, and then a wave 5 to the upside, where the most common target area for wave 5 is between 100k and 174k. In this particular scenario, this wave 4 is already finished after a WXYXZ, which is quite a rare correction, but it did bounce on the 0.5 Fibonacci, which is a maximum target for a wave 4 taken from the low of 2 to the high of 3. It also ended exactly on the 0.618 Fib time, also taken from the low of 2 to the high of 3. And we had a high volume peak at the lows, which can signal a reversal area, just like it did with the low of wave 2 over here. So this was the COVID dump, which practically then is just a wave 2. And then we had that massive 3 to the upside. But you can see a volume peak over here, very high volume, which was then the start of a continuation to the upside. Now we had two potential trading scenarios over here. We had the first one entering just above the 0.5, stop loss below the 0.5, as you don't expect high time frame candles to close below the 0.5 for a wave 4, trading it to the upside. But the more safer option is to wait for the retracements and then enter the long in there for then the stop loss below the low of this wave 4 and looking out for a big macro trade to the upside. If you then go to the daily time frame, basically zooming in to the macro scenario I've just shown you, then this over here is the low of wave 4 and we are looking for that big 5 to the upside, right? So this is then the first wave. So we have a wave 1, 2, 3, sideways 4, wave 5. In this scenario, this wave 4 does not have any crossover in price action with wave 1, which is what you want to see. Wave 3 is not the shortest wave, as this wave 5 is shorter than wave 3, which is also what you want to see. Of course, wave 3 is not as extended as we would usually see in a wave 3, where it would hit the 1.618. It's shorter than wave 1. However, the main requirement in an impulse is that wave 3 cannot be the shortest wave, which in this scenario is not the case because of this wave 5. In this particular scenario, as wave 5 is then in, as well as this yellow wave 1, we are then looking for a corrective structure to the downside. Now, the minimum target for a wave 2 is the 302, which is a rare target. So the 302 currently sitting at basically 23.8k is a rare target for a wave 2. The more common targets for a wave 2 are between the 0.5 and the 0.78 Fibonacci, taken from 21.9 or basically from 21.9k to 18k, and these fibs are taken from the low over here to the high of wave 5. Now what I think is interesting is the golden pocket area over here, where you also have a little bit of a liquidity grab, so price might move to the downside, grab the liquidity, make everyone bearish as we took the low, and then continue to the upside for a very, very big wave 3. If we then go back to the macro time frame and have a look at my preferred bearish scenario, we are looking at this one over here. So we then have a wave 1, 2, 3, 4, 5. Now this wave 4 is then a little bit odd, as this one is definitely shorter than this wave 2 over here. And usually a wave 4 is longer in time compared to a wave 2. However, you could put this wave 2 over here and this wave 1 over here, but that is something for another video. In this scenario, this is simply the end of a 5-wave structure, and we are now in an A, B, C wave corrective structure. So if we then zoom into this corrective structure over here, what I'm looking for is this to be a wave A, then a corrective structure in a wave B, another impulsive move in a wave C. So having a 3-wave structure and then a bigger wave B, right? That's what we like to see, a 3-wave structures over here. So we then have an impulsive structure in this wave A, 1, 2, 3, 4, 5, as I've just shown on the other scenarios, right? 5 waves in this wave A, which I think is nice to end somewhere in this white box that you see, because this white box is a very, very important support resistance area that we had throughout the years, basically. And it would be nice to have at least some resistance for a move to the downside in then this potential wave B, for then a continuation up for wave C, where I think the golden pocket to the 786 area over here is going to be massively important, and that is the prices 39k to basically 50k. And the reason why for me that is so important is because of the volume levels that we have. So the point of control of this very, very high time frame range is sitting at 38.8k, which is in exact confluence with the 0.618 Fib. Also, we have the range, volume profile range, value area high over here in blue, which basically almost has the exact confluence with the 786 at about 48.3k. So this area over here is massive resistance for Bitcoin for, in this scenario, a potential move to the downside. It could be that this wave over here is a 3-wave structure potentially, which then is a wave A. However, that is not preferred. So in this scenario, I would prefer an A, B, then another C, and then a move to the downside, where if we look to the downside and the support that we have, we also got massive support to the downside between basically 11.2K and 8K practically, right? So what we have is we have the golden pocket taken from the low to the all-time high, sitting at exactly the same level as this another massive volume profile range value area high. So basically the volume profile taken from this whole structure, the range value area high, a big volume level, is sitting at 9.7K, right in the middle of the golden pocket, and also right in the middle of the target area for a potential wave C. If this is a wave A, wave B would move towards like the 786 kind of area. Then the most common target area for a wave C is this one over here, the white box between the 1 and the 1.236. So you can see this area over here is massive, massive, massive support, and this area over here is massive, massive, massive resistance. So we have very clear support and resistance area on the macro time frame for Bitcoin. If we then zoom into this structure, it's not too different as I've just shown you. This is then on the daily, like the high time frame count, and as you can see, we then have the same 5-wave structure over here, with this being a 1, 2, 3 sideways 4, finishing with a wave 5. Now entering a corrective structure to the downside in a wave B, which you want to see is a 3-wave structure. So you want to see this being a 3-wave structure. Now, in a wave 2, if this is like a 1, 2, 3, 4, 5, usually, let's actually put that on the chart, the most common correction for a wave 2 is a zigzag, which is a 5-3-5 wave structure. It's a sharp move. Often it's relatively short before then continuation to the upside. However, a wave B can be many, many different patterns. It's not necessarily a zigzag. It can be a flat, for example, like an A, B, C. It can be a complex structure. It can be anything. So a B can be much, much more complex. Now, of course, a wave 2 can also be very complex. It's just a bit more rare compared to a wave B. So that is something to take into account. And then the trading setup over here, the potential setup is the same, liquidity grab and then eventually a move to the upside. The invalidation is the same as with the bullish scenario. The only difference is the length of this trade to the upside, right? Because with a wave C, you expect the target to be quite similar to the length of wave A. So the length of wave A and the length of wave C often have a one-to-one relationship. Also, the volume in this potential wave C should be equal to wave A or lower than wave A, or maybe lowering down while the impulse is moving to the upside. While if we look at the bullish scenario, and this is a wave 2 and we're looking for 3, you want to see the volume increasing massively during this wave 3 to the upside, and that is the very big difference on how to know if this move up is going to be a wave C or a wave 3. It's based on volume and also actually based on structure, because a wave 3 is going more vertical, 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 while with a wave C, it can be a bit more like time consuming, a bit more horizontal, let's say. So this is what I'm looking out for. I hope this video was helpful or valuable to you. Please check out the most recent update if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.